Imagine you are standing in the middle of a chaotic stock exchange where everyone is screaming, sweat is dripping, and fortunes are vanishing in seconds. Do you ever feel like the stock market is just a giant, high-stakes casino where the house always wins and you are just a small pawn? What if I told you that the secret to massive wealth isn't about predicting the next big tech moonshot or being a math genius? Instead, it is about something much more boring, yet infinitely more powerful, hidden within a book written over 70 years ago. Welcome to the world of Benjamin Graham, the legendary mentor to Warren Buffett and the man who literally invented the concept of value investing. Today, we are diving deep into The Intelligent Investor, the book that Buffett famously called by far the best book on investing ever written. We aren't just summarizing. We are going to unpack the psychological armor you need to survive the madness of the modern financial markets. Before we begin, think about your own bank account. Is it a source of stress, or is it a tool for your personal freedom? Graham starts by making a crucial distinction that most people get wrong: the difference between an investor and a speculator. An investor is someone who seeks to preserve their principal and achieve an adequate return through thorough analysis and safety. A speculator, on the other hand, is basically a gambler who hopes that a stock's price will go up simply because someone else will pay more. Graham warns that if you treat the stock market like a casino, it will treat you like a gambler, and eventually, the house will take everything. To illustrate the insanity of the market, Graham introduces us to one of the most famous characters in financial history, Mr. Market. Imagine you own a small share of a business, and every single day, your partner, Mr. Market, shows up at your front door. Some days, Mr. Market is incredibly happy and optimistic. He tells you the business is worth $1 million and offers to buy yours. Other days, he wakes up on the wrong side of the bed, feeling depressed and terrified, claiming the business is only worth a few pennies. The trick, Graham says, is to remember that Mr. Market is there to serve you, not to lead you or tell you what to do. If he offers you a ridiculously high price, you sell to him. If he offers a ridiculously low price, you buy from him. But most of the time, you should just ignore his shouting and go back to your own life, focusing on the actual business value. This brings us to the second core concept, the difference between price and value. As Buffett says, price is what you pay, value is what you get. Think about it like buying a winter coat. You know the coat is worth a certain amount because it keeps you warm and lasts for years. If the shop suddenly raises the price to $5,000, you don't think it's better, you just think the shop is crazy. Yet, in the stock market, when prices go up, people get excited and want to buy more, often paying far more than the actual value. Graham teaches us to be defensive investors. This doesn't mean being scared. It means being smart about your time and energy. A defensive investor doesn't try to beat the market by picking the next Tesla. Instead, they focus on high-quality stocks and index funds. They set a plan, like investing a fixed amount every month, and they stick to it regardless of what the news says. On the other side, we have the enterprising investor. This is for those who want to put in the serious work of analyzing businesses. Graham warns that if you don't have the time or the temperament to do this research, you are better off staying defensive. Now, let's talk about the single most important concept in the entire book, the margin of safety. Graham uses a brilliant analogy. When you build a bridge that is designed to carry 10 pounds, you build it to hold 30 pounds. That extra 20 pound capacity is your margin of safety. It is there in case of bad weather, structural flaws, or unexpected heavy loads. In investing, the margin of safety means buying a stock at a price that is significantly lower than its underlying business value. If you think a company is worth $100 per share, you don't buy it at $95. You wait and buy it at $70 or $60. This way, even if you are slightly wrong about the company's future, or the economy takes a dip, you are still protected from losing money. The margin of safety is what separates the intelligent investor from the speculator who is constantly living on the edge of disaster. Graham also talks extensively about inflation. He reminds us that money sitting in a drawer isn't safe. It is slowly being eaten away. To combat this, you must own things that produce value. Businesses, real estate, things that can raise their prices as the currency loses value. But remember, the intelligent investor never pays too much, even for a great business. Valuation is the key to everything. One of Graham's most famous students, Warren Buffett, once said that his investing philosophy is 85% Benjamin Graham. Think about the discipline it takes to ignore the noise of the internet, the hype of the news, and the panic of your friends. It is not easy. Humans are social animals. When we see everyone else making easy money in a bubble, we feel like we are missing out. But Graham reminds us that the investor's chief problem, and even his worst enemy, is likely to be himself. Your emotions are the biggest threat to your wealth. Fear makes you sell at the bottom, and greed makes you buy at the top. The intelligent investor develops a system to bypass these emotions. They automate their investing and focus on the long-term horizon. Graham's wisdom is timeless because human nature doesn't change. We were greedy in the 1920s, and we are greedy in the 2020s. By reading this book, you are essentially getting a psychological vaccine against the madness of the crowds. As we wrap up our journey through this masterpiece, I want you to ask yourself, are you acting like an owner or a gambler? True wealth isn't built overnight. It's built through years of patience, discipline, and sticking to the principles Graham laid out. If you found this helpful, hit that like button and share it with a friend who is tired of losing money in the market. Don't forget to subscribe for more deep dives into the books that can actually change your life and your bank account. Remember, the best investment you can ever make is in yourself. Start reading, start learning, and stay intelligent.